In today's video, I will show you an amazing trading strategy that uses three moving averages, EMA, and the CCI indicator. The best thing is that it can be used in any time frame greater than 5 minutes, within all Forex currency pairs. In my case, I'm going to test it on the euro-dollar, on the 5-minute chart. The first thing we will have to do is select the CCI indicator and put it with a parameter of 200. We will deactivate the background and the upper and lower lines. The Commodity Channel Index, CCI, is an oscillator that measures the force behind a price movement. In its simplest form, it allows us to judge whether these forces are trending up or down. In this aspect, the CCI indicator has some similarities with the momentum indicator. The value of these indicators oscillates on both sides of the zero line. A high CCI indicates that prices are above average. A CCI rising to these levels indicates increasing strength. A low CCI indicates that the price is below average. This is an indication of weakness. Then you will have to select 3 exponential moving averages, but because the program I used does not allow us to put more than 3 indicators, we will put this one here, which already has the 3 moving averages included in a single indicator. The first one we will configure with 10 periods. We will put red color, and we will raise the thickness to 2. The second moving average, we will put it of 21 periods. We will put blue color, and we will raise the thickness to 2. Finally, the third moving average, we will put it of 50 periods. We will put black color, and we will raise the thickness to 3. Once we have everything configured, we will explain when we will make buy operations. We will carry out a buy operation when the CCI is above its zero line, and also the red EMA is above the blue and black with very little distance between them. That is, the red almost touching the blue. Also, the price must be above the 50 EMA. If this is fulfilled, we will perform the operation. We will place our stop loss below the last low, and our take profit in the support and resistance zones with a minimum risk-benefit ratio of 1:1. In the case of wanting to carry out a sell operation, we will do it when the CCI is below its zero line, and also the red EMA is below the blue and black with very little distance between them. That is, the red almost touching the blue. Also, the price must be below the 50 EMA. If this is fulfilled, we will perform the operation. We will place our stop loss above the last high, and our take profit in the support and resistance zones with a minimum risk-benefit ratio of 1:1. Let's see some more examples. and ready. I hope this strategy has been useful to you. Do not forget that before trying it with real money, you need to try it in a demo account so that you can put it into practice by yourself. Do not forget to subscribe so as not to miss any strategy, as we upload the best strategies every week.